Hello everyone, my greetings to each one of you. This is the fourth session on rural development, where the discussion has been mainly on rural credit. In the previous session, you have understood the problems faced by banks in providing rural credit. I am Poonam Vohra from Idiot Economics Learning Center. This session focuses on cooperatives, as cooperatives are the most important institutions providing rural credit. So let us understand about cooperatives. Let us understand the rural cooperative credit structure. There are different types of cooperative credit institutions working in India. These institutions are categorized as agricultural and non-agricultural. Agricultural credit institutions dominate the entire cooperative credit structure. Agricultural credit institutions are further divided into short-term cooperative credit structure and long-term cooperative credit structure. The short-term institutions cater to short-term financial needs of agriculturists and have three-tier federal structure. At the apex, there is state cooperative banks in each state. At the district level, there are central cooperative banks, and at the village level there are primary agricultural credit societies. Long-term credit is provided by the state cooperative agricultural land development banks and primary cooperative agricultural land development banks. Rural cooperatives are regulated by NABARD, which is regulated by Reserve Bank of India. State cooperative banks provide a link through which RBI provides credit to the cooperatives and thus participates in rural finance. So they function as a balancing centers for central cooperative banks by making available the surplus funds to central cooperative banks. They finance and control the central cooperative banks and through them the primary credit societies. And they obtain their working capital from their own funds, deposits and borrowings. These deposits come from individuals, local bodies and others. So far as central cooperative banks are concerned, they are in the middle of three-tier cooperative structure. These can be of two types. One, whose membership is open only to the cooperative societies, and two, there can be mixed central cooperative banks whose membership is open to both individuals as well as cooperative societies. They also raise their working capital from their own funds, deposits, borrowings and few other sources. But the main distressing feature here is heavy and increasing overdue loans. Then primary agricultural credit societies form the basis of the cooperative credit structure. It is a village level institution which directly deals with rural people. It encourages savings among the agriculturists, accepts deposits from them, give loans to the needy borrowers and collect payments. So it is a link between the ultimate borrowers, that is rural people on one hand, and the higher agencies, that is central cooperative banks or state cooperative banks or NABARD on the other hand. Now assess yourself. A piece of information is being provided with the gaps in it. Clues are also given. Using the clues, fill in the gaps with appropriate term. I will read it for you. The bad state of agricultural finance has been taken care by the cooperative credit societies. In the field of cooperative credit, primary agricultural cooperative societies provide mainly the dash and the land development banks provide dash. Primary credit societies dash able to provide adequate and timely credit to the borrowing farmers. Clues given are long-term finance, have been or have not been, short-term and medium-term credit. Please check your answers. The bad state of agricultural finance has been taken care by the cooperative credit societies. In the field of cooperative credit, primary agricultural cooperative societies provide mainly the short-term and medium-term credit, and land development banks provide long-term finance. Primary credit societies have been able to provide adequate and timely credit to the borrowing farmers. Self-help groups. A self-help group is a financial intermediary voluntary group comprising of 10 to 20 entrepreneurs having homogeneous socio-economic background. Members make small regular savings contributions over a few months and become financially stable in a position to take loans from the money collected by that group. This movement gained momentum after 1992. In 1999, Government of India introduced Swaran Jayanti Gram Rozgar Yojana to promote self-employment in rural areas through formation and skilling of self-help groups. The program evolved as a national movement in 2011 and became a national rural livelihood mission. Today, state rural livelihood missions are operational in 29 states and 5 union territories. These are working together to nurture and strengthen self-help groups. This program is renamed as Deen Dayal Antyodaya Yojana in 2015 and covers 100 million families through 8.5 million self-help groups with a saving deposit of approximately 161 billion rupees. I hope you have understood cooperatives as an institution to provide short-term, medium-term and long-term credit to the farmers. With this, the session comes to an end. The next session would focus on the problems faced by cooperatives in providing rural credit. Till then, keep reading and keep learning.